All right, let's just dive right into this explainer and finally demystify the totally confusing, jargon-heavy world of health insurance bills. Look, if you've ever felt completely overwhelmed staring at a medical statement, you are absolutely not alone. Today, we're going to break down these concepts so clearly that you'll be able to read your very next medical bill with total 100% confidence.
So picture this. You go to the doctor because you're feeling awful. You hand over your insurance card at the front desk, assuming the whole visit is fully covered, right? But then, a few weeks later, you check your mail and bam, you get hit with a surprised $200 bill. You probably thought you were protected. You're honestly probably staring at that bill in bewildered frustration, asking yourself, wait, why on earth do I owe money when I literally pay for insurance every single month? You see terms like deductible, copay, coinsurance, and out-of-pocket maximum, and it just feels like they're written in a completely different language. Well, don't worry, we've got you covered.
Today, we're essentially handing you the decoder ring for your medical bills. We'll be moving quickly through 4 key areas. First, decoding your healthcare costs. Second, copay versus coinsurance. Third, the out-of-pocket maximum. And fourth, a really easy memory trick to tie it all together.
Okay, let's jump straight into Section 1. Decoding your healthcare costs.
The very first concept we need to tackle is your premium. Now, your premium is simply the payment you make just to maintain your insurance coverage. Think of it like a monthly subscription fee. Say your premium is $300 a month. That means you're paying $3,600 a year just to keep the insurance active. It is completely separate from the money you pay when you actually get care. So just remember, paying your premium definitely does not mean your medical care is going to be free. And that brings us to the dreaded deductible. Think of a $1,000 deductible like a starting hurdle. You have to pay that first $1,000 out of your own pocket for covered services before the insurance company even thinks about sharing the costs. For example, if you have a $1,000 deductible and get a $600 bill, well, you're paying all $600. Get another bill for $700 later, you pay $400 of that to hit your $1,000 limit. Only then does the insurance step in to help with that remaining $300. Make sense?
Next up is the copay, which is just short for copayment. Now notice the word fixed here. That is absolutely key. A copay is a specific unchanging dollar amount. Your plan might say your primary care doctor visit copay is $30. So you walk in, you hand over $30, and your insurance plan pays the rest of the covered amount for that visit. The exact same thing goes for something like a $15 copay for a prescription. It's just a flat, predictable fee.
This brings us to a crucial point, because beginners constantly confuse copays and deductibles. The key difference here is that some plans actually let you just pay a copay for a basic visit without having to pay down your entire $1,000 deductible first. So for that standard doctor visit, you basically just ask, hey, how much do I pay for this specific service? And happily hand over your $30. But for larger procedures, that's when you have to ask the heavier question. How much must I pay before my insurance starts sharing the costs? And that, my friends, is your deductible.
Moving right along to Section 2, copay versus coinsurance.
So unlike a fixed copay, coinsurance is a percentage. This means your out-of-pocket cost is going to scale based on the total allowed amount of the medical service. And you generally only start paying coinsurance after your deductible has been completely met. This breakdown brilliantly illustrates standard coinsurance. Let's say the allowed amount for a service is $1,000, and you've already met your deductible for the year. Fantastic. Now, you just pay a 20% slice of the bill, which is $200, and the insurance company covers that massive 80% chunk, paying the remaining $800. It's just a shared split.
But keep in mind, these coinsurance percentages are based on what insurance companies call allowed amounts. These are special, discounted prices that your insurance is pre-negotiated with in-network providers. A hospital might try to charge $2,000, but your insurance's negotiated allowed amount might only be $1,200. Your 20% coinsurance is based on that lower $1,200 number, which is exactly why going out-of-network can be just disastrously expensive. Those out-of-network providers haven't agreed to the lower allowed amounts, and honestly, your insurance might not cover them at all. So always ask, is this provider in my insurance network? Now, when you see all these complex charges getting processed, doctor fees, lab fees, facility charges, you're going to get an explanation of benefits, or an EOB, in the mail. Take a deep breath and do not panic. It is literally just a summary document. It is not the actual bill from your doctor. It simply breaks down what the provider charged, the negotiated allowed amount, what the insurance covered, and what your potential responsibility is going to be. Just file it away and wait for the actual bill from the doctor's office before you pay a single dime.
All right, let's dive into Section 3, the out-of-pocket maximum.
Listen closely, because the out-of-pocket maximum is probably the single most important number in your entire health plan. It is your ultimate financial safety net. It's a strict limit on your cost sharing. If your maximum is, say, $5,000, and you actually reach that limit through your deductibles, your copays, and your coinsurance, your plan generally steps in and pays 100% of covered in-network care for the rest of the entire plan year. It is the absolute cap on what you have to pay.
Let's do a little cumulative math problem together to see how this works. Imagine you need a $10,000 procedure. Good news. Earlier in the year, you already met your $1,000 deductible. So for this big $10,000 procedure, you simply pay your 20% coinsurance. 20% of $10,000 leaves you responsible for $2,000, while your insurance covers the massive $8,000 remainder. And the best part? That $2,000 you just paid gets applied right to your out-of-pocket maximum, bringing you that much closer to that sweet 100% coverage safety net.
Hitting your out-of-pocket maximum is obviously great, but hold on, because there are a few important exceptions to remember. Your monthly premiums, those do not count toward this financial ceiling. You still have to pay your monthly subscription fee no matter what. Furthermore, any out-of-network care or services that your plan just flat out doesn't cover won't count toward this maximum either. So please, don't assume hitting your maximum means literally everything medical is suddenly free. It only applies to covered in-network care.
Let's wrap this all up with Section 4, the easy memory trick.
To keep all this straight in your head, just imagine your health insurance is an exclusive club building. Your premium? That's simply the monthly membership fee you pay just to keep your key to the front door. Your deductible is the initial spending threshold you have to pass at the entrance before the club starts buying you drinks. Your copay is a fixed ticket price to access certain special rooms inside, like a $30 ticket just to enter the doctor's room. Your coinsurance is the percentage split you share with the club on any big expenses. And your out-of-pocket maximum, that is the absolute ceiling. Once you hit that roof, the club pays for all your covered services inside the building for the rest of the year.
So here is your ultimate takeaway today. Never ever choose health insurance based only on the monthly premium. Why? Because a super cheap premium is very often hiding a massive, terrifying deductible. You want to always compare the total potential cost rather than just hunting for the lowest monthly payment. A plan with a low premium might have an insanely high out-of-pocket maximum, while a plan that costs just a bit more each month could literally save you thousands of dollars if a real emergency actually happens. So I want to leave you with the challenge. Pull up your summary of benefits tonight and ask yourself this final question. Are you only looking at your premium, or do you truly understand how costs are going to be divided when you actually need healthcare? Take 10 minutes, do the math, find your specific numbers, and make sure you are never caught off guard by a surprise medical bill again. Thanks for hanging out for this explainer, and we'll see you next time.